Welcome to the Building Business Podcast, a podcast where we speak to the real people behind businesses. In each episode, we'll be having conversations with founders, leaders and entrepreneurs about the highs and lows of running businesses. So we've created a customer success team. So the business was always kind of like me and Lewis were like customer facing,
right.
Sales, customer service. And then that up basically the majority of up to last year as well. And then we did a bit of exercise, obviously talking about the different drivers of growth and stuff that I was just telling you about then. And we identified that we spend loads of time on acquiring the customer, spend loads of time, money and effort in getting the customer on. And then when they come on, it's like, who looks after them?
Yeah.
And it was always like the customer service team did it, but it's like a secondary responsibility for them because obviously they're making sure deliveries are on track and updating. So keeping in touch and building relationship with customers was not a priority.
Yeah.
So we looked at it and we was like, are we missing a trick here? Because if we look after them customers and increase their spend, we probably don't need to sell as much. There's probably more money and it's easier to do more with them and bring new people on. So we hired Steph, who came in and started doing it.
As an account manager, basically.
So like customer relationship manager.
Yeah.
So we then had like sales, bring it on, customer success, look after it.
Yeah.
And we worked on like, what's the first 90 days look like? What are the touch points? How do we make it? How do we wow them? That worked really well. We then doubled the size of the sales team and we've now doubled the size of the customer success team. So last year we had one person and me, and now we've got 4 people and me. But you're right what you're saying, like in terms of responses, obviously the girls kill it, absolutely kill it, you know, rightly or wrongly so. They're contacting fellas who are in a warehouse with a load of fellas. They probably not want to speak to me or Lewis, do they? Do you know what I mean? I've tried. The girls, and they go toe to toe with them, they get on really well with them. But then the other side of it is it's your title as well. So like it really, really pisses them off because they'll be trying, and then I'll just wade in and get a reply straight away.
Yeah.
People want to speak to the owner, the director.
Yeah, and different people respond differently, you know. Some people just don't care and that's fine. Other people, you know, regardless of what I say, you know, listen, I do absolutely nothing with applications. I send you the figures, and then that's really the last I look at your case, to be honest. Because the team are equipped to do it.
And that's how
they've done it for 10 years. But then you come away, and they continue to ask me for the updates, or where are we up to?
We had a while back where there was a customer who kept ringing and asking for me. Mm-hmm. And it was at the stage in the business where I started stepping away from doing the day-to-day because it was like, listen, we've built this now, it's great, I've got great people, I can't be in it and continue building it. This guy kept ringing, so I'd take a few calls and he'd be like, I'm just after the price. Mm-hmm. No problem. So you do it a few times, then I was saying to the team, you need to start saying, like, I'm not available. Oh, he's not available at the moment, can I help you? No, it doesn't matter.
Right.
And he stopped asking for the price. They'd give the same price. They'd probably give a better price, if I'm honest with you.
Yeah.
And then one of the girls contacted him once, and he turned around and he was like, "Oh yeah, I don't book you anymore because Andy doesn't speak to me." And it's kind of like, at what point?
Which is the difficulty of kind of migrating from being a, you know, everybody's still an SME, but from being a small business to trying to outgrow yourself. The small business USP you always give is when you start is personal service, whatever, and so on and so forth.
It's not sustainable, though, is it?
And that is fine to a point, but you start bringing in team members to, you know, subsidize certain roles that you're, you know, they can do as well as you can. But a lot of the time, the relationship still has been built with you, and a lot of people can't let go. And you do have to come to a point where you say, where you just, you don't necessarily have to say it, but like you say, through actions, just prove you might just not be the right fit for what someone's looking for, you know. And for what we do, you know, we're mortgage broking's like a super personal thing. Yeah. But And a lot of people do want that, you know, that one person as a touch point.
It's a sector where, like, it's all built on trust. And it's like, they come in because it's you they've got the relationship with, you've dealt with them previously.
Yeah, to a degree.
Well, so definitely within, like, I know I did your mortgage 5 years ago, but now so-and-so who works for me can look after you. Are they going to be like, oh, well, no, I want to deal with Sam?
Yeah, and I'm happy to do whatever. It's just I think it's whatever the messages you put out,
Yeah.
right, when you acquire them. So in my case, I've for the last 5 years, I've never really been customer facing per se. I give the solutions,
Yeah.
and if people call me, I'll take the details most of the time, and
Yeah.
I'll send the figures
Process
out.
is the same,
But
isn't it?
then I'll say, listen, and from this point onwards, Lex is going to get your
Yeah.
documents. George is going to submit the application and get you to offer.
Do you think a lot of it comes
Um,
from like how you portray yourself in your business as well? Because you're not a faceless organisation. So
Yeah.
if you're very visible and people can see your people on social media and on marketing comms and stuff, it's kind of like, well, it's not just Sam. I don't need Sam because I
Yeah.
can see all of his team there, and I can contact
Yeah,
them.
yeah. I think if you present yourself as, I am the guy, and then
You then become the
you've got,
bottleneck,
like
don't
you
you?
say, the faceless people behind you who do everything else. People, rightly or wrongly, come to the assumption that you are the go-to for every single
Yeah.
little bit in the thing. But to be honest, and I think we've probably made quite a good, because I've been like that from the start. Because I'm quite personable, I think, without giving myself too much.
I think you are.
But I don't want to be talking to people all day.
Yeah.
I speak to people enough, It's,
Do you know what I always say to
Um,
people as well? Like, you go into business and the goal has to be, someone said this to me a long time ago, like, your only job in life is to make yourself redundant. In business, you're successful when they don't need you anymore. You have a child, you've got to raise them to not need you anymore. So you've got one goal, make yourself redundant.
Yeah.
And that stuck with me. And I think business is the same. I've spoken to people who like set up a business because they really wanted to do it and stuff. And now like they can't go on holiday. They're working 16-hour days. And I'm like, have you got a business or have you just got another job?
Yeah.
But
And-
a job that you don't get holidays,
And
or
then,
you
and
probably
then
don't
they
get paid as
celebrate
much.
and they say, "Yeah, but I'm my own boss." And I'm like, "Well, maybe you should find a boss sometimes." And I don't think I'm not an entrepreneurial spirit. I became a business owner by accident, really, just out of the circumstances at the time. But yeah, it's. When I started, I was with a business coach from like day one, and it was the action coach model, and it was always like, a business, like you say, a business is successful when you don't have to run
Yeah.
it, and I was always moving to that, but then I think because I focused so heavily on that, I did miss the opportunities you
Yeah.
get from being
Yeah.
yourself in the business. I think you grow quicker at the start if you do
Oh, without a doubt.
really throw yourself into
And
it.
yeah, I think a lot of
and you're
startups have
present.
to as well, because you didn't necessarily start up, did you? So how
No.
so you acquired the business? Is that how you?
You pretty much, yeah. So we reached a position where, my career path has just been falling upwards basically, but completely accidental. So I was an apprentice mortgage advisor in a corporate mortgage advisor whole of market structure. Got tired of that because they segued into non-advised life insurance.
Right.
So I was like, well, this doesn't feel very good because I'm a qualified advisor here, not able to tell people what I think
Yeah.
they should be doing because they weren't
Right. Okay.
an advised service anymore. So I left and I thought, well, let's just coast for a little bit and, stamp a few documents and be a mortgage admin because I was just a bit worn out,
Yeah.
to be honest. And then a couple of months later, all the staff left from that business, set up their own mortgage brokerage. So
Bloody
pretty
hell.
much, and then I effectively fell upwards into being the manager of that business.
Right. Okay.
So
Just
I
by
hired,
chance?
Yeah, well, I was the only option, right? And they knew that I was qualified to be an advisor and pretty good at it. And so I said, well, do you mind if I hire the boys? The guys I'd done
Yeah.
who'd been in the apprenticeship cohort
Get the band
with
back
me.
together.
Yeah, exactly. So over the course of a year, I hired everyone back in who I'd done that with, and my friend Charlie we brought into the business as well. He hadn't been in mortgage advice, but we kind of brought him in, and I trained him up to be an advisor. And Lewis and George, who'd been apprentice advisors, then became did their qualifications. But eventually, as it transpires, the financials, shall we say, of the business weren't as strong, perhaps due to overdrawing on the directorship level or whatever it might have been, and it just reached a point of capitulation. And then it was the choice of, well, do we just find a job, or we have a client bank here, and so basically I bought the business from its embers, if you will, and we started from that.
So you carried on that business trading, which meant you could keep working with the clients.
So that remains a trading style of ours, and then we set up Clark Mortgages with a view of that being like the brand people know me as, And we lent more heavily into the specialist mortgage side of things, like the complex and the whatnot, because Lewis and I had both done accounting qualifications before we did mortgage advice stuff.
So obviously you've kind of got the expertise to look at...
which maybe, maybe a lot of people don't. The mortgage advice exam is 3 multiple choice exams.
Right.
It's... On a good day, you might pass it just like the driving test. You know what I mean? It's done in the same. It's done in the same venue as the driving test.
Is it actually?
Yeah. So here I am with a bunch of
the wrong test there.
A bunch of HGV drivers, getting their credentials, and there I am talking about everything mortgages.
Imagine if you walked into the wrong room and ended coming up with a class 1.
Before you know it, I've got my my high vis on and I'm working for you. But so it was just one of those, and we just said, well, let's make a meal of it. And a couple of years later, Charlie left and started his own mortgage brokerage, and he's doing really well. It's quite nice to, there's plenty of business for everyone. So I don't take.
Is it quite a friendly sector, or like?
Yes and no.
There's enough things to go around.
There are people you meet who will be. I think it's probably the same in every business. I've never been in another business, so I don't know. But there are people who do what you do, and by extension, they are your enemy. Everything they do will be to naysay you. Oh my God, they're expensive. They're slow. He doesn't respond to you. I've heard bad things. But in my case, I think I've carved out a niche for us because we lean so heavily.
I was going to say, what are the differentiators? Because in theory, obviously, aside from the niche, a mortgage advisor.
Yeah, so everybody is qualified to do the same. There are a few differences. Everybody is qualified to the same level. I actually took it a step further, and I got to diploma level. So I'm the top qualified advisor, which is like, I think it's only like 1% of brokers get that.
Yeah.
Most people are a level 3, a CMAP qualification, right? Yeah. Certification. And technically speaking, they can all do everything. However, you have commercial mortgage brokers, and then you've got regulated mortgage brokers. Commercial mortgage brokers don't tend to be regulated by the FCA.
Right, okay.
Meaning they can only lean into investment and commercial mortgages.
And you can do both, can you?
So we're a bit weird for most regulated mortgage brokers sit just in like your own home, your family home.
Why is that?
It's sticking to what you know. Most don't have the structure to train it.
Yeah.
Commercial leans quite heavily into understanding accounts by extension.
Which is where you obviously, Lewis, have got.
Exactly. Most residential mortgage brokers will deal with buy-to-lets, so, your property investment, whatever, and build a portfolio that way. Nowadays, so many people buying limited companies, so it started to lean a little bit more commercial, and commercial mortgage brokers lean into that way as well. So there becomes that crossover. But I suppose you don't know what you've never been taught or what you've never tried to learn. So
how have you guys got that much expertise? Is that because of the team you've got and it's shared, or is that just because you're I've done it
for quite a while now. So we've always been quite a large brokerage. So I probably do like nearly 100 quotes a month myself, and I've been doing it for 10 years now. So I'm probably like touching. In the first business, we were getting 2,000 mortgage leads a day, and I was the kind of partnerships manager who was bringing those leads in.
Jesus.
And marketing and whatnot. So I saw, all of these, and I was dealing with the stats of that business largely. Yeah. I mean, I was an apprentice mortgage advisor, just shelved into a much higher role because I was
if you go into something like that, though, when people think he's got something about him,
Yeah.
you end up performing well above your pay grade.
Well,
and your
you
title.
learn on your feet, or
Yeah.
it's sink or swim, really, isn't it? And
Yeah.
luckily, I was, capable enough and tech enough to get on with that. But generally speaking, it was just a case of looking at things and saying, and it was drilled into us that you never let a lead go.
Yeah.
Right.
Love that.
In the corporate side, it was like, if you are speaking to a lead, you have to convert it.
Yeah.
And if you don't, well, it's a red mark against
Yeah.
you, which is brutal, to be honest, compared to now.
Good training, though, isn't it?
But now it was like, well, now that it's my money funding it, it was like, well, every single lead that comes through our door, we will sort you out.
Yeah.
And sometimes they don't take it because if someone's got 5 CCJs and 8 defaults and mortgage arrears in the last year, I can probably still find a home for it, because I don't turn away any business.
Yeah.
But the structure of it is going to, for flexibility, you get price. And sometimes they just won't, they're just not up for it. Fine. Well, what can you do?
Yeah.
But for us, we ended up just pretty much saying yes to everything, quoting everything, and following up with that, because we're not just throwing willy-nilly figures out. But I think, so for instance, if you go to, who am I thinking of? Certain fee-free brokers or small fee brokers like national brokers, countrywide, for argument's sake, they are whole of market. Well, I don't even know if they call themselves whole of market.
Right.
But primarily, if it doesn't fit with the top 10 lenders, oftentimes they just won't help.
They won't necessarily put that work into finding a solution.
Yeah, well, who can afford to?
Because they've got a number on the red.
If you've got, if you're dealing with a huge volume of clients and you've got 50 clients on your desk already, and you know that this one is going to take you 4 hours of work to review, meanwhile you've got 49 others chomping at the bit saying, oh my God, I need to move into my home. Like, it's a stressful experience. Then you just cannot find the time really to put into that.
Yeah.
The way I've kind of built my business is functionally, because I am, antisocial in the business.
Yeah.
I don't speak to people. All I do is find your solution, and I say, well, these are the facts. Let's Rubik's Cube this situation and fit it all together. And let's ask the questions that, maybe do make people uncomfortable. I am willing to say, listen, you need to find another 10 grand to make this work, and you can pay off X, Y, and Z. Yeah, and oftentimes, if you don't tell people this is how you need to twist things in order to get it through, they don't know it, and you don't know that they don't have the resources.
I suppose
to do
it's
that.
not as black and white, is it? You'll look at it and be like, listen, we can do it, but this is how we need to present it.
Mm-hmm.
And sometimes for the applicant, then that takes longer.
Yeah. I mean,
because it might be like, listen, you might need to wait a few months while we get all this in place and demonstrate this, and then
sometimes I try and place things as is, to be honest, and say this is where you are now, so this is what it costs now.
Yeah.
If you did do those few things and you paid off that, and you got your new set of accounts, because we're in March now and April's coming up and you can do another tax return, then maybe we could get to here, and so on and so forth. Then we can plan out a structure of, this is what your timeline looks like. But because, I charge a higher fee than pretty much most brokers, I'm willing to put that time in, because it's, if we're talking, I think when I was speaking to someone, a straightforward mortgage is probably like 10 hours cumulatively of work.
Yeah.
So if you're a fee-free mortgage advisor and you're getting a 0.3% of the mortgage amount procuration fee, which is the fee that's paid by the lender, which a lot of clients will say, oh, you're paid by the lender. Why are you charging?
Yeah.
Well, that 0.3% of your average 200 grand mortgage around the north is 600 quid. Well, if I'm, in my case, it's me plus 4 other admins working your cases exclusively between
it's
them.
then illegal.
Well, what am I going to do?
You're then running a sweatshop.
Yeah, exactly. Yeah, maybe I need to get children doing the mortgages for me. Following Apple's footsteps. No offence, Apple. So you charge more to be able to benefit people with more of your time. And
Where'd you get a lot of your leads from then? So you said before, when obviously before you took the business over, you were getting all the leads in and stuff. Do you purchase them, or
I don't buy leads. The first company was a mortgage brokerage built off a lead generation company.
Right, okay.
So it sold leads on a CPL, a cost per lead basis, to other brokerages. So through that, I got to know loads and loads of brokers.
Yeah.
You know, we had thousands of brokers on the books. And I was speaking to them and, getting to know them and their business. How do you... and I suppose you learn the faux pas of what they do. So, for instance, they would get a lead in real time. We'd send it out and they would go, oh my God, the conversion rate is atrocious. I'm not converting these leads. I'm not speaking to them. And, you'd go through the basics, which is, well, how long do you take to get in touch with that client? Oh, well, then, the next day when I'm free.
Response time's massive,
Response
isn't it?
time is huge. And so in our case, I built a CRM which now auto initiates conversation with that person.
Did you build your own?
Well, we customized off the Go High Level system.
Oh, right, okay. Do you use that?
Yeah.
Do you still use it actively now?
Really, really good. Yeah, I
we're
really
looking
like
at
it.
that, aren't we?
And cheap.
What do you use it for in the business now? Everything.
Everything. So it's our contact base. From that, they have opportunity pipelines. So in our case, we've got a mortgage pipeline, a life insurance pipeline. Let's say building content, whatever. And each of those has a different sales process. So at every stage, so when we receive the new lead, it comes in as a new lead, and that automates. And
have you built all that automation into their platform as well?
I did all that. Yeah.
Was it difficult to do?
It took me, in fairness, about a month of my evenings.
It's not dear at all, is it? Are you paying flat? Do you pay flat fee, or do they charge?
So mine's
transaction
a white
fees?
labelled version, but it's like £200 a month.
So you can get an agency account, can't you?
Yeah.
So we were looking, obviously, because we've got a number of businesses. So we use it currently, don't we, through the third party for Quickline.
Yeah.
And Frank's using it for email marketing and social media scheduling. That's it.
Right.
So we're not even tapping into.
Yeah.
half
So the
of what it does.
pipelines and so I mean it's difficult to say whether it's how it can be attributed because mortgage advice it's known as a service, right? People can. It's not. It's a product really. We're selling. We are selling a mortgage, and so there are phases of delivery, really, and then it's project work almost. So once it's ended, it comes to its conclusion. So it's quite easy to map that out into what they call a pipeline.
Yeah.
Because the mortgage pipeline and the process of a sale is the same. By and
just
large,
move that
every
into
single
different
time,
sections
and
of
so
the pipeline.
every person at every stage gets their task set for them, which I kind of,
Is that called like a Kanban or something like that?
I have no idea, but
The kind of board that you move it along.
it's that kind of thing,
got a name
and
for
it's
it,
almost, it's almost like being on the pass at in a restaurant, and just. Well, this order's gone out and off it goes. So the new lead comes in.
And then you've got automation at every stage of that as well.
At every stage, yeah.
Maybe good to have a look at that, how you set it up. 'Cause it's something, so we're using it currently, but we're gonna go and get one of the the main accounts and then sub off to it, because we've kind of got Quickline, we've got this, we've got the football club, we've got Real 5, so we're gonna build them all out. I say Frank's gonna build them all out.
Yeah, and it took ages of my time, but I was also having to get familiar with the
It's perseverance,
system
isn't
and
it?
so on.
You've got to.
But I spent the full month doing it. I migrated all of my data over.
How long have you been on that now?
We've just come to our first full year now.
And it's been a good move.
Yeah, so my previous CRM, for instance, we couldn't log multiple sales against, which sounds ridiculous saying it, against the one contact. It was one contact, and it was pretty much just a contact log against that. And you could do mass texting against them, and you could do mass emailing against it, but you couldn't have these workflows and automations of. And so it was everything manual. It was difficult to track. Now I know, well, what is the value of the quotes I've sent so far?
Brilliant.
And it has a follow-up process of
and
those
that's then
automated.
How you've used Claude to plug stuff into that as
And
well.
that then, through Claude, I then integrated the CRM into Google Sheets.
I hope you're listening to
which
this,
is
Frank.
now
This is a game changer for us. This
So now that then tells me, well, you've got this many cases, here are the flagging points against the task. So every contact and opportunity has tasks against it, which is auto-generated. Because ultimately, the process, regardless of whether I'm doing there's slight differences between commercial mortgages and whatnot, and we have processes written for that. But if a quote gets accepted, they need an onboarding call.
Yeah.
And the onboarding script I've written out, and Lex on my team who deals with
I
the
think
onboarding.
it comes back to like systemizing what you do. So like
Yeah.
you are the product. People want to deal with Sam. People want to deal with Lewis. Anyone else in your business. And the better the system and the process that you build behind that allows you to just do more of what sells.
Yeah.
Which is
Yeah.
you. Do you know what I mean? And it's every business should be systemizing what they do. And
Exactly.
there's still a lot that don't.
So, it was just start to finish. So from new lead to completion, or in fact, from new lead until they're waiting for their review of the next fixed rate of that product coming to an end.
So I'm in there with another 4 years.
Exactly. Yeah. So you'll
and is that automated as well? So then you
get
can then
an
market
automated
all that
text
as well.
6 months ahead of your fixed rate expiring that will say your fixed rate's coming up, and into Lewis's diary or whoever's doing sales at that
I want
point.
to speak to Sam.
Well, tough, You'll get the quote from me, but that's about it. And in fairness, a lot of my existing clients, they don't care so much.
Yeah.
The first referral that comes into me, I'll always take that on, and because the relationship is between us, and I'll spend that time. But eventually, you've been through the process. You've gone through a whole application and offer, and you come to the realization, Jesus Christ, this guy does nothing for me. It's only his team, and so you care less, really.
Do you know what that just means? You've done a good job, though.
Yeah. Well, hopefully, but
so obviously leads. Then, so you're using the software to set up different lead magnets that pull them in.
Yeah. Well, I haven't really delved that far deep into it. So we've got two brands: the Key Mortgage brand, which was the one I bought, and the Clark Mortgages, which is what I set up. So we've got websites for both that we do PPC into.
Right. Okay.
And
does that work for you?
Yeah. Well, it's you're paying for leads in a looser sense. What I like about it is it's your brand.
You've got a value on the lead as well, though, haven't you? So, like with what we do, because there's so many differentiators. Like every vehicle size has a different tariff.
Mm-hmm.
If I go from that postcode to that postcode, it's that much. If the postcode changes by a few miles, the price changes. So, it would be difficult for me to put a price on a lead because that lead could book a £30 job.
Well, yes and no, because you know what it's cost you to. So if you know what your ad spending is and you know what your conversion rate
and
is,
I suppose you can fix that.
Then
lead.
you can assign a lead cost to that. So if you are spending, I don't know, £2,000, £5,000, whatever on PPC, and you convert at a 2% rate, well, in that case you're getting what's that, like 10 leads or something like that.
But then I suppose it's lifetime value, isn't it? So
where
it's different for us, obviously you'll do one mortgage application for them, and then in 2, 3, 5 years' time you'll do it again. For us, they might book 10 jobs a week.
Yeah.
So it's not just.
But that first opportunity of business that you get with them has then had a cost of, well, those 10 leads have cost you £500 each to generate. So you assign that with the Go High Level system. It can auto fill that as a lead cost. So I know now what that's cost. I then within the system have built in. Well, of those 10 guys, I've quoted 8 of them. 2 of them didn't answer. And of those, well, 2 of them went to the business, and this was the value of that business at the quote accept stage. And of that, once it's completed, I've tracked it start to finish, and I look at, January's leads now, and I say, well, I spent £2,500 in marketing. We generated 25 leads, which cost me £100 each, and I got 4 completions off that to a value of £10,000. Well, in that case, now in April, I can say, well, let's keep pushing. Let's see if we can maintain that.
It's not, and you're tracking that data,
and it depends on what your life cycle of as I say, we are selling a product, but you are in a sense as well in that your service can be. Yes, you can maximize the number of transactions you do with a person, but it is a product that you're selling. It's the
PPC
delivery of
delivers
whatever.
You faster ROI, doesn't it?
Yeah.
But the moment you stop paying, the leads stop.
It's off, yeah.
Whereas SEO will kind of build it organically.
Yeah. And so now, as of this month, I've started a project of SEO.
Yeah.
But when you're a new business, and I'm a major pessimist, to be fair. Like I've been ready to be bankrupt from day one. My team will tell you.
Bring it on.
We managed to survive, and now I've had to come to terms with the fact that we're not going bankrupt, and and
do you know what? It's not a bad mentality to have, though.
No, but I go in. It's a weird balance you have to find, because you can't be too pessimistic to the point that you say no to everything. I'm willing to try things.
I think that's where me and Stephen work so well. So Steve is the pessimist. And
yeah.
to be fair, he's nowhere near as bad as he used to be. But Steve is like, stop spending. No. So we're like 31% up year on year.
Yeah.
Just this month. And I'm still having to make cutbacks and protect the margin. But he's looking at, well, I can see what the markets are doing. I can see fuel. I can see all this. It's the right thing to. If it wasn't for him, I'd have been bankrupt 10 years ago.
Yeah,
do you know what I mean? You need that someone pulling the reins back. The fact that you're pulling your own reins back.
Yeah, well, it depends which side of the bed I wake up in the morning, I think. But it's, I'm pessimistic with the business as a whole, in the sense of I need to make the right choices to make sure the lights stay on, the guys get paid, because you, as a business owner, you're responsible for families, really.
Yeah. We've got like 27 mortgages on our heads.
Yeah,
before.
Yeah, exactly. And so you want to do right. I'm not going to go away and spend my working capital because I go, this'll 5x my money.
I know so many people that do it though.
Oh, they do, and
they're driving around the flash car, and it's all through the business, and
ultimately, and I do think. Is certain business coach principles, they talk about pay yourself first, and I completely disagree. I think
pay yourself last.
I think you should. I think it's the responsibility you've made.
I
to your
do agree
team.
in the sense that if you're not rewarding yourself, what's the point in doing it? But
in the long term, you need to look at yourself.
You've got to make sacrifices, haven't you?
I've
spoke to people who are trying to launch businesses and stuff, but they're talking about leaving $100,000 a year job to start up a business, and they're like, but I need to earn $100,000 a year, and I'm like, it's not going to happen. I didn't pay myself for 12 months when I set my business up. I was fortunate I didn't have to, but that's what it takes. It takes that sacrifice, that grit, that determination to be like, I'm going to sacrifice it all, because I know in 5, 6, 7 years' time, I can pay myself a good wage, and I can.
Yeah, but if in November 22 I turned around to my team and said, right, you're all going to set up with me, and you'd better hope that we earn money, because I'll be paying myself that money first. And meanwhile, so if you don't earn enough, then good luck. Your mortgages go bump, but I'll be sorted. What a way to start.
There's a lot of people
things.
that would be like that, though,
and it's ridiculous. And to be fair, maybe people don't start with a team like I do.
Yeah.
They build up from themselves, and then so they skip that step. But ultimately, you do. So as I say, I'm pessimistic with making sure that whatever choices I make, it doesn't impact on the interests of others. But I'm optimistic with the spend of my own profit. I'm willing to say, I'm happy to throw 15 grand at. For instance, we tried building AI systems, and it's not quite worked as you hope that it'll 10x your business. It didn't. It did okay.
Are you using AI within the business?
Yeah. So the idea we'd built was to have an AI system that would basically engage with clients yearly to book in an annual mortgage review, because ultimately that was someone's job. Would have been someone's job before. Yeah. And we have an active client base of about 3,000 people.
Yeah.
So to get up someone's file to prepare for a call, and then you get to a voicemail, and you spent 15 minutes preparing for that call, it just wasn't worth it. So this automates the booking of appointments, and people who respond to it then can come in, and we say, listen, have you got anything you want to look at? Let's review and make sure your protection is still relevant. Let's make sure that your mortgage is still fit for purposes. Have you had any life events? That kind of thing. Similar to, I don't think a lot of mortgage brokers necessarily do that, because it's common in the IFA world. It's the expectation nowadays. But again, we're not really delivering a service per se. In that once you have the mortgage, for a lot of people, then
Thing is, like,
that's it.
3-year terms, 5-year terms is a long time, isn't it?
Yeah.
But in that period, they could forget about you. Do you know
Yeah,
what I mean?
even not, and so we through the Go Higher level, I've got a marketing guy who sends monthly newsletters just to keep base and let people know what's in the market, and encourage people to get in touch if they've got any questions, and so we try and straddle the border, if you will, between selling a product and delivering a service. You know, they've paid to get the mortgage, but our responsibility still is, to let you know that your fixed rate's ending, to let you know that rates have gone up or rates have come down, and so maybe you've missed that bit in the news because the news only tells you when things are going bad and not when it's going good. So that rate that you got at peak 2023, maybe even though you're in a 5-year, might actually be better to come out of it and whatnot. But if you're not in touch with your clients, so it was in order to kind of make sure we're still able to deliver the volume for all of these people who've been through our doors and used our services. And not everybody cares. Some people just say, well, my mortgage is in for 5 years, I will look at it again in the future. But people do split up, or you so on and so forth.
That's crazy. It's good, and that's your challenge. With that many clients, communication's key, isn't it?
Yeah.
But and also staying relevant, and that's a lot. I suppose a lot of your marketing is more about farming than kind of hunting.
And when it's never a case of we don't really, newsletters aren't curated to be high conversion rate or clicks. What are the clicks like? It doesn't matter really.
It's just
keeping in touch with people. And some people then say, oh, nice to hear that you went to Japan, how was it? And I say, oh, great, how are you? And it's those little touch bases that actually make you a bit.
Do you make them quite personal as well?
Yeah. So my marketing guy, Gino, shout out to Gino, the coffee writer, he produces it, and he pretty much says, well, what's gone on with you in the last month? And we discuss that, and sometimes he's got some interesting tidbits that he's observed, and it's just a nice thing to do, I think, to keep in touch with people. You can't be.
Again, though, it's another differentiator, isn't it? So you talk about, like, how do you differentiate to the other 3 mortgage advisors in the room, but you do that by being you. And people will, and I always believe, for as long as people are making that decision, they'll choose who they've got the best affiliation with and make that decision. Yeah,
and eventually, certain people do graduate from our services. If most of my clients are company owners, they have complex incomes, they might have credit issues.
Those clients that are earning 12 grand a year, but
12, 5, 70, wonderful times. And oftentimes, being tax efficient where you can is the smart thing to do.
Until you want to buy a house.
I'm not saying tax evasion, pay your taxes, but if you can get an accountant to sign off and say, well, if you do X, Y, and Z, then you're going to pay no tax and you won't effectively show much income on the books. And, well, if it's legal, then fair enough. However, in the conventional sense, that doesn't always help you get in the mortgage. Like I try and do a little bit of LinkedIn case studies and whatnot as we do nowadays. It's peaks and troughs for me because I get my head into a busy week, and then I can be so inconsistent in telling other people what we're doing. Which is the worst time really. When you're busy, you want to tell you want to shout about it. But I just a salary of 12.5, you might have taken a 37 grand dividend, you're at 50k. NatWest might give you 250k mortgage, but if you've had an 80k net profit, you can, in that case, we work off the net profit plus your salary, and you're at 450k.
And is that based on shareholders and?
So assuming you're 100% shareholder.
So if you're like a 20% shareholder, you'd only have access to 20% of
the net profits. Generally speaking, in a mortgage sense, most of the time, you're not considered self-employed until you're 25% shareholder or above. So it depends on, a certain number of our clients might be directors of the business, but they're large business. They've got a 5% shareholder and they get a dividend every year. Well, that's more within the realms of employment. The reason being, you don't have a significant enough shareholding really to influence the business in such a way that
it's over 25%, isn't it? I think.
Yeah, so if you've got a 5% shareholding, you can't really influence how the accounts are shown, right?
Yeah.
Because you've got 95% of other shareholders who are actually making the decisions on this is where our net profit's going to be, this is what the dividends are going to be. So yeah, 25% plus. A lot of the time, people are 50-50. Sometimes they brought their spouse on to
tax efficient.
Yeah, exactly. And they're given a 12.5 salary through them, and because they were, maybe they're a homemaker for their family, but you get your 12.5 salary, and you've decreased your, so on and so forth. So there's plenty of ways to skin a cat, and if you look at a pre-tax profit as well, so this is the thing that doesn't. So if someone has a 100k salary as an employee, and we get a 5 times income, they will be at a 500k mortgage, right? If someone has had a salary and a dividend out of their business, so let's say they've had 87.5 profit and 12.5 12.5 salary.
So,
that's 100 grand, right? However, you've paid corporation tax, and then a lot of these lenders, even the ones who are looking at net profits, are going, well, off your salary and net profit after tax, which is 25%, let's say, or roughly. So that's a 65k after tax plus your 12.5. You've now got 77k of income, and at 5 times that, you are getting 385,000. So you're
actually borrowing less than employed.
So you've made exactly the same amount of money gross as that employee. But because they're looking at the top level and these guys are taking off the tax, you've actually come out with a smaller mortgage. So sometimes you might even work to pre-tax profits in the business.
And that's where you would go in and be like, no, that we can make it look like this. Based
on so if you are going to say, I'm not digging into NatWest or
High Street Bank,
or Halifax or someone who isn't going to look at that and perhaps isn't going to present that as an option, because a mortgage broker within a bank is only going to tell you about. It's only allowed to tell you about their own policy.
Product,
they're restricted to that.
And I suppose there's lenders that would specifically lend to complex cases.
So there's a whole bunch. I mean, to be fair, there are certain things that you would go to a high street bank and which you would think are complex and are, but they have just built within their criteria.
I was going to say, do you find that some banks specialise in different types of cases than others?
So for instance, 1 year's trading. Everybody says you need 2 years, 3 years books or whatever, which is from the past. But Halifax, of all people, does 1 year's trading.
Right. Okay.
You wouldn't have thought that a high street bank does. Nationwide works off contractors' contract value as opposed to necessarily what their pay slips will say or whatever. Halifax, for instance, will do day rate contractors, even if you're putting it through a limited company off the contract value, if you're earning enough. NatWest will do second homes, and rather than taking the aggregate mortgage, so let's say your total mortgage aggregate that you're affordable is 500k, because you earn 100. If you've got a mortgage in the background of 250, a lender like Barclays might say, well, then we're going to give you another mortgage for 250.
Right. Okay.
If you've got two. NatWest will take the mortgage in the background as a monthly payment similar to a loan, so they might give you 475 for your second home. So there's loads of loads of little things really that.
And I suppose obviously by coming to you, you've got access to that knowledge in that bank. If you go to your bank, like you say, oh well, I'll offer you this, Mr. Jones.
And a lot of people might come away just saying, well, this is the way it needs to be done, or even if you're dealing with a broker that just doesn't have the time to delve into those those potentially 4 or 5 layers of your income.
Like you say, there's a lot of work that goes into that, isn't there?
Yeah, it's just knowing how to frame it and knowing what questions to ask up front. So if I take a call from a person who's a limited company, I might say, well, tell me what your salary dividends were, what your salary net profits were.
You've got that bit of like a flow chart where you're saying, do you own your own business? Yes, there's the questions.
Yeah,
no, the questions.
So again,
you'll follow that.
You learn how to piece things together, and And generally speaking, I'm pleasantly surprised nowadays when someone presents me with something I've not seen before. It's quite a nice challenge, you know. If, for instance, certain people have Phoenix their business, and we need to. What if we have to work off the previous business's trading, and you've got contract values going forward? It's interesting. I just like. I just like something you can kind of dig your teeth into, and it's a bit of an ego stroke, to be honest. Then say, "Oh, I did."
It's a challenge as well, though, isn't
it?
When you've done something for so long, you're like, "Come on, someone give me something."
Yeah, and so that's why I think, you know, for me, who's done as many complex cases at this point as I have, if we do have two first-time buyers and you're both employed and you're both borrowing well within your means and never missed a payment, then you are probably going to fit with HSBC, NatWest, Halifax, Barclays, whoever's cheapest. And most mortgage brokers are completely well equipped to manage that for you at way cheaper than we would charge. So I just figured, well, do you know what? Let's, rather than it was when I joined my first networking group that I ever joined was BNI. We'd never done face-to-face networking with other businesses because. And
were you proper wet behind the ears? You had no idea.
Yeah, and so you come in as all other mortgage brokers do, and you say, "Well, we'll help with any mortgages." Yeah. And in truth, we are probably the most accurate for that, in that we do any mortgages, like resi, commercial, buy-to-let, bridging, all the rest of it. But if you ask for anyone, you get no one, or you end up getting, you know, the people. In truth, we were specialised in a certain way to deal with that and really show what we're made of that way. But you end up coming to a point where you can competing to the bottom, you know, on a price basis. You know, your industry must be.
Oh yeah, and it's like, that's like for us there. It's that differentiator. So it's not necessarily finding a niche, although again the old marketing adage is market towards your ideal client.
Sure.
I'm really reluctant to do it all the time because I will take anyone's work.
Mm-hmm.
But it's something I'm working on. But it is that kind of, how do you stand out? So like, we're investing heavily in technology, because if we own the tech and it's our tech, I know I can go and compete on tech then. Yeah. And I know I can go and confidently say to the customer, there you go. Our tech is integrated into your business. You're not going to go anywhere else. Mm-hmm. You know, we're doing kind of like management level, board level reporting from our system now. So carbon emissions reporting, massive. Everyone's on about it. It's not going away. Our system is feeding information to boards of directors about the carbon emissions that are being emitted from their logistics movements. As soon as they start depending on that in a regular, monthly, quarterly board meeting, I'm in.
Right.
Do you know what I mean?
And so that's all of these kind of
and that,
environmental work for these public
and that comes from like, that goes back to the customer success side of things, and sitting in front of customers, which we've invested in now, and asking customers what matters. Yes, we come in, we do deliveries, that's fine, but how do we make this less transactional and more of a partnership?
Yeah.
So what matters to your business that we can help you with? And you know, one of the customers said the other day, a monthly summary report of our activity. It was built within a day. There you go. Mm-hmm. And the customer's like, this is amazing. We can tailor it. We can do it on, because it's our software. Very easy to do.
Yeah. So and you're just automating
MI sticky in businesses,
pertinent to whatever that business requirement is.
Yeah. And the more that, for me, it's like, it is about, we don't just want to be another transport company. Mm-hmm. It's about how can we fully integrate into what they're doing and drive their business. So we're having conversations like, what's your growth plans for the business? And I've got people saying, why are you bothered?
Yeah.
Because we're on the journey with you. We're growing, you're growing. Can we grow together? And a guy said to us the other week, like, no transport company has ever asked us that question, because they don't care. Because it's transactional, gives you work, bang, we'll do it, completed, done. Whereas I'm like, no, let me get into the business. Let me find out what the challenges are. Because it's not just, yes, we can help you with the logistics. It's also, have you got any other challenges in your business? Because I've got a network, and I've got a network of some really good people. And chances are I can link you with you. And I can link you with you. Do you know what I mean? It might be, I'm really struggling to get a mortgage at the moment because I own the business, and I'll go, guess what? I've got a guy who can help you out.
Yeah.
And we probably don't do that enough, but it's something that
that's what I really found from networking, to be fair. As I say, mortgage advice is a B2C experience, right?
Yeah.
Yes, you do have the sense of when you start taking on commercial work, you can act for the businesses and whatnot. But largely speaking, our clients are owner-managed businesses anyway. So that's still a B2C experience in the sense of, for argument's sake, if you and Steve were to say, well, we're going to buy a premises or whatever, there's not a board of shareholders that you need to run that by, and a board of directors or whatever the difference is. So largely speaking, it's B2C for most brokers. Outside of the really large commercial deals that happen, and so by extension, it was kind of the previous director at the time had this client base, and we were like, well, we don't need more leads. But I got a cold call one day actually out of a guy who was in it, who just said, "Oh, you're a mortgage broker local to us. Would you come along to a little meeting at the racecourse?" And I thought, "Oh, free lunch, yeah, brilliant." And then as it were, it turned out to be the cult, and and we joined, and then put on our hoods and all the rest of it.
Do you know what though? Like, cults aside, it works. Do you know
It really
what I mean?
works. It was really the one of the best decisions was joining that, because it just opens your eyes to, well, there's another way. I was fielding 100 leads a month, and because we were really nailing the internet at that time, and we hadn't really diversified, and we had existing clients, and back in like 2018 or whatever, mortgages sold themselves because the rates themselves were 1%, whatever. So it was an easy job. 2015 to 2019 in mortgages, maybe 2014 to 19, was a completely different market to what it is now.
Yeah.
And then following 2020, banks kind of tried to digitize themselves a little bit more. You've got the apps where you could switch your own mortgage and that kind of thing, and by extension, I mean, ironically, coming into now, more mortgage business presented to these lenders than ever. NatWest, for instance, particularly with the closure of branches and that kind of thing. But at the end of the day, it does invalidate experience a little bit when all of these, when the easy option is just to take the non-advised route and just click the button. Okay, well, I'm going to take.
People don't necessarily know whether they're getting a good deal or not.
Yeah, and a lot of the
if they
people
can get demonstrated, okay, well, I'm switching and I've saved 30 quid a month, they'll be like, that's dead good. But chances are, if they're just doing that through a click of a button, they could probably save a lot more.
But it starts to be a little bit like renewing your phone contract, right? Because you've got your app, and your mortgage is currently $13.50 a month. Rates have fallen in the last couple of years, and so now that same mortgage is $12.75, and with a click of a button you can take it. And people go, "Oh, it's cheaper than it was before," ignoring the fact that there was $11.20 on the table from another lender. You know, but you don't know what you don't know, and a lot of people then, leave it last minute maybe, or just don't know someone who can sort it for them, and or can't be asked comparing a bunch of brokers.
A lot of it, I think you're right. A lot of it will be effort. A lot of it will be everyone wants everything now, bang, 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 done. Mm-hmm. And sometimes it pays to take the time and speak to the right people,
particularly when you consider a mortgage where the difference might be a couple £100 a month for the next 2 years. Well, that's £2,500 a year, 2,400 quid.
Decent few holidays, that is.
It's absolutely great. But as I say, any broker who's worth anything can sort that kind of thing, and so I just figured, well, let's just become the first choice of a second refusal, because through networking, we would talk about, this is what we've done for this person, and the stories that speak the loudest are the ones that are a bit wacky, and this is how we've helped, and it would resonate better with people, and before I knew it, it was almost like people contending for which was the hardest deal, one after another, and we just kept on doing them, and ultimately, like I say, there's usually a way to fit everybody, and so
that's what sets you apart, isn't it? That's the key.
And so, because it's a smaller market and there are fewer people willing to take that on, it's absolutely fine to just be that person. But
so how long have you been at the business now?
November 22 we set up, so 3.5 years we've been going, 4 years in
And
November.
what's the dream? What's the big plan?
Well, I started. It was again, it was kind of through business coaching. It would start with the end in mind type thing, and so it was always a sale. Build enough to be a whatever. But I just realised that you can automate it for efficiency's sake, and build and whatnot, but it's not worth depriving yourself of your lifestyle while you're doing that, and always kind of. So I've you naively, when you set up the business, say, well, I'm 5 years, I'll be sold, five, and then I'm like, well, I'm 29 at the moment. What do I do at 34? Having, and I was, what would I have been, 25, 26 when we set up the business. So that would have had me retiring in a year or two.
Yeah.
Well, what the hell do you do after that?
Do you know what I think as well? You need that thing that gets you out of bed in the morning.
Yeah.
And I've spoken to people that have exited and they've been on lovely holidays and they've bought the cars and the house and that, and after about 3 months they're like, do you know anyone's got any work?
Yeah. And over the course of it, people when we started it, I was the oldest person, or me and Charlie were, and everybody else was within a year or two of our age. So, we were single and, free and no responsibilities aside from a mortgage and all the rest of it. So it was very much, exciting. But then people start families and all the rest of it.
Wall Street of mortgages.
It was, sell me this mortgage. A little less cocaine maybe. But you come away from it and then you're like, well, do you know what? Actually, a good place to be is just to be a business where people can stay for ages. All the guys have been with me now for near enough 8-9 years at this point.
Yeah.
And just to be in a place where you can support someone to make as much money as they can. You want to grow the business enough to keep people going with it.
If you're enjoying what you're doing and everyone's winning,
you
have fun, everyone's earning good money, people want to be there.
Yeah.
Why would you want to get rid of that?
And I want it to be a place where people can build a career to the end of that road, whatever that might be. And it might be people are happy settling, or people are competent and are happy to be an admin, and that's it.
Yeah.
George on my team is training as a mortgage advisor, but has very much said, well, I actually really enjoy case managing and that kind of thing. So I want to do my qualifications for my experience, but I'm happy now as I am, and then latterly he'll start advising, I'm sure, on bits and pieces. But you want to grow quick enough. In my case, I want to grow quick enough that I can support my lifestyle.
Yeah.
As I don't live particularly. Well, I'm fortunate, but I'm not. I'm not looking to have private jets and all the rest of it.
Maybe not.
Yeah, we're working on it. But to grow quick enough that you can absorb other people's growth.
Yeah.
To keep, your mates with you basically till the end of their careers, whenever that might choose to be, and to whatever level that.
Like you say, if you're enjoying it, why would you give it up? But at the same time, if you create that environment where you have fun, people earn well, the collateral of that is you keep growing.
Yeah.
And inevitably you put yourself on a map where an offer will come and it'll be too good to refuse.
Well,
but we were talking about the other day, weren't we? And it was like...
Yeah, exactly. And it was one of those things where you're trying to put in all... You're putting in all of these processes and X, Y, and Z, and, because this is what a corporate looks for and whatnot. And I thought, well, actually, at the end of the day, flip it on its head. If everybody in a business makes money and the business makes money... then surely it becomes attractive to other people anyway, and it's much more enjoyable to be part of rather than always being so picky on every single metric.
Definitely.
I think you should
processing systems are great, but you can over systemize and sweat the small stuff, and the reality is strip it right back. There's probably 3 or 4 metrics that matter. And I think one of them is people and their satisfaction. I think that's probably your most important metric, because I think if you nail that, everything else gets delivered.
Yeah, and you get the right people in who are, hiring's difficult because I've always I hire on vibes basically, but it turns out that can be a little bit of a maybe not the strongest
It's a
hiring
lottery
strategy.
anyway. Like some people can interview amazingly. I think everyone does the CV on ChatGPT nowadays, so that doesn't shock me. I don't read CVs. It's sit across the table and have a conversation. If you think, do you know what?
Yeah.
He seems all right or she seems all right. Let's give it a go.
Yeah, but I'm definitely been guilty of paying too little attention to a CV. Like we were saying, there is a requirement of, at least a fluency with numbers, right?
Yeah.
To know your basic
Certainly
maths.
what you do, yeah.
Yeah, and I was very much, skills can be taught kind of thing. Well, not by me. I'm a terrible trainer of people. I can lead by example, but how much you pick up of that,
Yeah.
and I don't think it's a fair position. Well, this was the other thing. I don't think it's a fair position to just assume people are going to swim on because they're quick learners. And so you do have to have those processes, and you do have to have minimum
It's just the
standards.
boring part, though, isn't it?
Ah, terrible. Our first, all the guys were hired on an introduction at the pub to the director at the time, and off we went, and it worked.
I had an interview in a pub once, and do you know what? It was the best interview I've ever had.
Yeah.
You get prepared for an interview, and you go in like, do you want a pint? And I'm like, yeah.
Yeah.
I also want this job.
Yeah. Well, particularly when you're like 21 and you're like, oh my God.
Yeah,
it's
they
the
did that on
best place
purpose. I
ever.
can see what they've done there, yeah. They've proper sold it to me.
Yeah, but I just hope, like you say, you've got to leave certain parts personalised, but I don't know. I'm still working out what fits where.
Yeah, but you aren't doing bad for it though, are you? Fantastic business.
Yeah, well,
You're
we've
doing some great stuff.
really grown, which is great, and hopefully grown without necessarily having to add more people, and adding more people is difficult.
It's scaling it. It's being able to scale your business without adding costs to that, and that's there's a skill in that, and I think that's where automation and AI may come and play a part in businesses, but keeping that personality, keeping that culture, keeping that people aspect is what will really make you stand out, and that'll drive the growth for you.
Yeah, exactly.
Good, mega. Well, this has been enjoyed.
That was enjoyable.
How are we getting on, Frank?
What are we on?
Nailed it.
Well, happy days.
Absolutely nailed it.
God,
Well,
I
thank
can talk about me forever.
I love it. Thank you very
Next
much. And like I say, keep doing what you're doing.
Yeah, we'll see. As I say, tomorrow I might wake up and think we are going bankrupt. It's happening.
Oh mate, that's good. That really good. Thanks for listening to the Building Business Podcast. If you enjoyed the episode, please subscribe and share it with someone else who you think might enjoy it too.